Now let's bring in CNBC contributor Trivariate's Adam Parker. He's with us. It's good to have you here.
Always good to be here.
On this first day of the second half. So the tax bill has to be viewed by some as one of the catalysts for stocks in the second half, right?
Yeah, definitely.
Along with what? Earnings? Rate cuts? Tariffs not being as bad as first thought? What do you think?
Maybe what overwhelms all of that is just the dream that the AI game is still on for 2026. And so, like, that's what I've learned a little bit in Q2 is it was hard to get too negative when all the investment that happened in 23 and 24 has a 2 to 3 year sort of period till it's realized. And, like, you want to get negative, like, do that at your own peril because 26 numbers might actually be good. So
you tried to get a little more cautious. You weren't downright negative, but you tried to get cautious, and the market kept running.
Yeah, I mean, we had in January in the year-ahead outlook, we said the market will be down and volatile. Tariffs aren't in the price, and I felt like a genius on April 7th, and then kind of a jerk by mid-May, right? And so what I learned is, like, the tariff impact didn't hit, as much as I thought. The big 50 companies are mostly immune. The financials are in great shape, and there's some positives that offset it. And then also, we didn't really implement the most negative parts of what the words were on the tariffs either. So I think, you can look at pretty good risk-reward as long as you dream 26 is the year of margin expansion for a lot of AI deployment.
Are we a little complacent now that we've run to new highs? It's not like under the surface this whole market has played along in the run to the highs, right?
For sure. And maybe the price action of the big ones leading is telling you there's some tariff issues on margins for, stocks 250 through 500 or something like that. So it's easy to say, well, I want more breadth, but there isn't more breadth for a reason. Those companies are a little more vulnerable. I think the median stock has seen about 110 basis points of gross margin contraction in the last couple months. So I think most investors I talk to think we'll have a bit of a growth scare sometime August through October, but they don't want to get too negative knowing that we could have all this AI productivity stuff by 26 and 27. So I think that's how people are set up. I held a huge conference at my firm last week with a number of investors, and the ideas that were pitched were definitely a little more non-U.S. than I thought, a few more short ideas than I thought, a few more value stocks. It wasn't like we've seen in previous, let's just buy a bunch of tech. And so I think people are a little bit positioning for a bit of a growth scare, but don't want to get outright negative knowing the AI stuff's still coming.
Well, let's say, I don't know, 3-4 weeks ago you were here, you said you had one of these idea dinners, and people were pretty negative, right? The institutional investors that you are close to and talk to often, have they come around? Is there a FOMO element to this also, where if you're negative, I mean, you see this train running, you better get on or you're going to miss your station stop.
Yeah, I thought people's rhetoric was negative a few weeks back, but maybe they weren't positioned as negatively for it. Now, momentum makes us all in a better mood or in a worse mood, depending on the direction. I think people are saying the market is a leading indicator, and the market's telling me earnings aren't going to be as bad as I thought 3 months ago. I think that's true. And so I think people are afraid that in your scenario set, we could be 7,000 at the end of the year. That's in the possibility set, and you got to position
7,000 in the next 6 months.
Yeah, it's one thing that was interesting is I surveyed the room. What percentage of you guys in the room think we'll be down 5 by year end? Up plus or minus 5 to 10. Nobody took up 10% or more. What's the dream scenario? We talk about this all the time. You're a contrarian bull, and you're right. That's amazing. So now you come back and you say, well, maybe if I think the market's up 10 or more, I am a bull. I know you got Tom and Dan and some certain guys who are always bullish on tech, but I'm saying the broad institutional set was not that bulled up.
Lee and Ives.
Yeah. Well, channel favorites, I know.
Yeah, just making sure people know what we're talking about.
So, I need Adam Parker. I need both names, but those guys only need a first name. But I think people aren't positioned for that scenario, and I think it's a chance. And so you got to ask yourself, could the earnings, do I buy the low margin businesses where AI can help the productivity? I think so. And maybe for the first time in my whole career doing the macro stuff, I think I can outperform just within financials. I see so many offense and defense ideas in financials. That group of companies looks like it's in much better shape than almost any time in history. So I feel like there's ways to have upside that maybe I didn't feel as confident about 3 months ago.